Well, following the European Central Bank's rate hike to a record 4%, economists are anticipating that central banks are near or at their peak. Here with what we can expect from central banks this week is Yahoo Finance reporter Ines Ferre. Hey, Ines.
Hey, Rochelle. Well, let's start with the Fed. The market anticipates that the Federal Reserve is going to hold rates steady at the conclusion of this week's meeting, but it's leaving the door open for one more rate hike this year. Now, a Reuters poll shows about 20% of economists expect one more rate increase this year. Of those polled, a majority saw rate cuts sometime next year. Now, Fed Chair Jerome Powell has repeatedly talked about higher for longer, meaning that the markets may have to get used to the idea of staying at the current Fed funds rate level for a longer period of time. And one of the Fed's recent forecasts doesn't see inflation coming down to the 2% target until 2025. Now, several other major central banks have been following the Fed's lead in order to combat inflation and protect their own currency, by the way. The Bank of England is likely to hike interest rates one more time this week, possibly the last one this year. Both Citi and Goldman Sachs believe this Thursday's decision will be the last hike for the BOE. Meanwhile, last week, the European Central Bank hiked its key rate to a record 4%. The increase was accompanied with a statement that read in part that rates are at levels that, if maintained for a sufficiently long duration, will make a substantial contribution to the timely return of inflation to the target. Now, Deutsche Bank analysts don't see rate cuts for the ECB until at the earliest September 2024. And one of the challenges for getting inflation down, of course, are oil prices, which have been on a steady rise for the past 3 months, on pace for their largest quarterly increase since Russia's invasion of Ukraine last year. Rochelle?